This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, big B, little b for the currency, and big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Taking a look at our top stories, crypto custody firm NYDIG and payments giant NCR Corporation joining forces to make Bitcoin available to 24 million customers across 650 U.S. banks that NCR services. The firms bought a full-length ad at the Wall Street Journal for the announcement and told Forbes the initiative is in response to demand from NCR banking clients whose customers have been buying crypto through outside exchanges. NCR has ATMs and kiosks on 160 countries. Meanwhile, cryptocurrency platforms have been getting more complaints filed against them, according to the Consumer Financial Protection Bureau. U.S. crypto exchange Coinbase receiving the most complaints in the past 12 months, with over 1,000 registered. Finally, Representative Brad Sherman, Democrat from California, saying he hopes Congress shuts down cryptocurrencies, calling them highly volatile, at a House Financial Subcommittee hearing today. Democratic Congressman Bill Foster of Illinois also suggesting that crypto needs a backdoor. The Blockchain Caucus co-chairman saying a trusted third party, like the courts, should be able to reverse transactions with a skeleton key until the industry can deal with crypto ransomware attacks. All right, taking a look for a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is currently trading at 34,772. Bitcoin is down about 4% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin prices are on track for a record second quarter percentage decline, weighed down by China's crackdown on mining, concerns the U.S. Federal Reserve will start tapering its stimulus program, and persistent demand for downside hedges. Writes CoinDesk's Omkar Gaboli. Bitcoin is down almost 41% for the April to June period. The drop snaps a fourth quarter winning streak that saw prices chart a six-fold rise to over $60,000, according to CoinDesk indexes. The historically strong quarter began on a positive note, with Bitcoin rallying to a record of 64,800 or so in the run-up to the NASDAQ debut of crypto exchange Coinbase on April 14th. However, momentum stalled in subsequent weeks as retail investors struggled to do the heavy lifting in the wake of selling by large investors. The market therefore looked weak and took a beating in mid-May after U.S. electric car maker Tesla delisted Bitcoin as a payments alternative, citing environmental concerns. China's reiteration of the crypto mining ban and concerns of an early unwinding of stimulus by the Fed amplified the bearish move, pushing prices below 30,000 briefly last week. And while Bitcoin has traded mainly in the range of $30,000 to $40,000, sentiment has turned quite bearish, as evidenced by directionless trading in the wake of El Salvador's decision to adopt the Bitcoin as legal tender. And joining us now to discuss is CoinDesk Director of Data and Indexes, Galen Moore in Boston. Welcome to the show, Galen. So the technical definition of a bear market is when it declines more than 20%. But those rules don't exactly apply to crypto, where we see those kind of moves happen, on a given Tuesday. So I'd like to hear your take on where are we? Is it a bull market? Is it a bear market? Is it a mini bear market?
Sure. So I think it's a bear market. I don't think that's a very controversial call, but I think it's important to look at how easy it would be for Bitcoin to prove me wrong. So we were looking at the 20% dip sort of rubric that a lot of people were applying. We've had two 20% dips in Bitcoin in the XBX so far this year, and we've had bear market calls both times. But a 20% dip on the way to a new all-time high is not an unfamiliar pattern for Bitcoin. So we wanted to define a bear market to bull market change, or vice versa, as a 20% change followed by 90 days without recovering the former price. So the all-time high was on April 14. 64,888 on the XBX, if I'm not mistaken. And it has not yet been 90 days since that date. We're now 76 days into what I'm calling a bear market here. Bitcoin has 21 days left to prove me wrong. And I'll let you guess, Christine, how many times has Bitcoin done a 86% run up in the space of 21 days in its history?
I actually don't know this answer. Don't ask me.
Oh, you're going to be
But I
surprised.
imagine it's done it
You're going to be surprised.
like
23 times.
wow.
23
Okay, I was
21-day
going to
periods in
say,
which
I
Bitcoin
could
has
count it
run
on
up
my
that much.
hand, but no.
So no, I didn't
Okay.
expect you to. So very likely I'll be proven wrong. But nonetheless, I'm calling it a bear market. I don't think it's controversial. Lots of people noting that we're in bearish conditions right now. But don't count Bitcoin yet. Don't count Bitcoin out yet. It could be a short-lived bear market, or perhaps not even a bear market at all, but a dip on the way to a new all-time high.
All right. In your latest newsletter, Crypto Long and Short, you mentioned it's a rudderless market. We've been trading sideways in this 30 to 40 range for a while. Tell me what's going on.
Well, I think it's, we were in a kind of a institutional-led regime going into the beginning of Q1 and maybe for part of Q1 as well. Institutional activity seemed to drop off, and retail investors kind of take the lead with the run-up in Dogecoin and volumes that we saw in altcoins as well. So at this point, retail seems to be kind of exhausted, and we're not seeing any evidence that professional investors are coming in to buy the dip, as it were. Things like volume on institutionally focused exchanges like LMAX Digital, onshore futures markets are just not showing the kind of increase that we would expect to see if there was a kind of a rushing in to take control again by institutional participants. So rudderless meaning there really is nobody in control, nobody's driving.
Right. Well, institutions have restrictions on what they can do with client money, so they mainly buy into Bitcoin trusts such as GBTC. Therefore, GBTC ends up being a great gauge for institutional buying, but it's been trading at a discount since February. So has that institutional interest been drying up?
Well, I think it's, you look at the GBTC discount, there's also a cliff as lockups expire coming with a large number of GBTC lockups expiring in July. And what that means is that the GBTC discount is likely to continue. And when you can buy Bitcoin through a trust at a discount to the net asset value, that's going to be an attractive option for a lot of market participants who might otherwise buy in the spot market and drive up the price. So the GBTC discount continuing is a kind of a negative factor. In addition, the cheap price of mining equipment with China's crackdown is another factor. When you consider large buyers who might otherwise deploy capital in a spot market purchase, they may actually be looking to invest in mining rather than doing that. It doesn't work always one-to-one that way, but it's certainly an option that's on the table for them with mining equipment lower than it's been in price. So with those kind of depressing buy-side pressure, with those factors in the market, I think it's safe for me anyway to say that we'll get to the middle of July in this bearish condition, which is why I'm actually starting to take vacation next week. So I hope nice. I hope I can vacation safely, and I hope everybody can as well.
Enjoy that vacation. Oh, all right. But what will it take for Bitcoin to break this trading range for either the upside or downside? What are you looking at for? Another tweet from Elon Musk, or what will it be?
Yeah, I mean, it's certainly like, I think we're in a different market now than we were in the second quarter, right? We no longer have this kind of stimulus, work from home, day trader type of world. That doesn't seem to be as emergent or salient right now. So I think, tweets from Elon Musk, I would say might kind of decline in their ability to impact the market. Certainly we'll see them push the price. We'll see factors like that push the price on a kind of a daily level. But to see something actually push us out of this and into a different, like a more bullish posture, I think it would take like
it's going to be summer, thinner volumes and such. But Galen, thank you for joining us, and enjoy your time off.
Thank you very much, Christine.
Right, that was CoinDesk Director of Data and Indexes, Galen Moore. Coming up, as miners continue to flee China, where will they go? We'll continue the conversation after the break. Welcome back. All major Bitcoin mining firms in Yunnan have been shut down today. China isn't messing around when it comes to the Chinese Communist Party's 100-year anniversary, says Kevin Zhang, VP of Business Development and mining firm Foundry Digital. Note to viewers, Foundry is CoinDesk's sister company under Digital Currency Group. Zhang telling CoinDesk that the effective purge of large Bitcoin miners from China is reducing competition for Bitcoin block rewards and dramatically improving the profitability outlook for mining operations elsewhere. Not skipping a beat, North American miner Hut 8 buying $44 million worth of new miners, doubling its hash rate. And joining us now to discuss is Matthew Schultz, co-founder and executive chairman at CleanSpark, an energy software and Bitcoin mining firm headquartered in Utah. Welcome to the show, Matthew. So, just off the bat, are you in touch or familiar with the Chinese market and the miners there? And what's your assessment of the situation?
Yeah, thank you for having me. First of all, it's good for us to be back. So my colleague, Bernardo Schuchman, he's the SVP of our data center operations, has produced more than 50,000 Bitcoin throughout his career. And as such, he's developed relationships and been a primary dealer for companies like Bitmain. So, we've had insight into kind of what's been going on. And interestingly, I was listening to Galen talk about equipment supply and then, talking about Hut 8 making new acquisitions. And what we're hearing is that a large percentage of these rigs that are coming out of the Sichuan province that, were effectively operating on surplus hydroelectric power during the monsoon seasons are the less efficient, older version like S9 type equipment. And with the economic conditions as they are here in the US, it's unlikely that we'll see those resurface. So, we kind of see this as a temporary dip. And we're starting to actually see a higher percentage of inquiry into potential hosting opportunities within our facilities here domestically because of the fact that we've focused more on our ESG energy mix.
Right. So I read a Compass Mining report. They were on yesterday saying that the concern isn't that energy is being consumed, but rather that the amount of carbon emissions that is what concerns people, the amount of carbon emissions that are being emitted. And that's a lot of what concerns CleanSpark, correct?
That's absolutely right. So we cut our teeth in the energy space. I mean, we design renewable distributed energy microgrids, and we started out working for the U.S. Marine Corps at Camp Pendleton, designing resilient systems for data centers, communication, navigation, guidance, et cetera. And we did our first cryptocurrency mining microgrid solution back in January of 2018. And so when this opportunity to provide an energy solution at our Atlanta facility came up, our data analytics team took a real deep dive on it, and it made a lot of sense to kind of marry our renewable energy kind of ESG based approach to energy management into digital currency mining, and that's thus far proven to be really effective. And our initial strategy was obviously to target an area that had a very low carbon impact. We've been real public about the fact that we have a 95% carbon free energy mix in our initial Atlanta facility, but then to add renewables and energy storage and to provide those type solutions throughout the industry. And we're really starting to see some traction working with other hosting facilities as well as other miners to provide them solutions that can impact not only the financial side, because it's reached the point that building a renewable energy, a solar power plant, is less than a carbon emitting or a coal-fired power plant. So to not only focus on stimulating that type of investment through other relationships and partnerships, but also to create long-term power purchase agreements with different utilities that have addressed a sustainability initiative and a desire to make a greater investment towards renewables, and to have the confidence and the certainty of a PPA with a company like CleanSpark or some of the other miners gives them the confidence to make those investments. So we really see that it's balancing the energy mix positively in the long term.
Right. And I hear that being professed on Twitter a lot, that this is actually a great thing. And so is your sense that Chinese miners, as they migrate, and we hear that they're migrating to Kazakhstan, to Maryland, airlifting miners to Maryland, are they taking their equipment with them, or are they just ditching it and buying new equipment that is more energy efficient and clean?
So that's a great point. And CleanSpark has participated on a number of panels domestically about responsible energy management in the space. And, one of the things that we obviously don't have control over is, like you said, in Kazakhstan, where 97% of the energy is non-renewables. And so, the census is that, did China just kick the ball down the road and have those miners displaced to other areas that don't have the focus on the resiliency? And that's kind of yet to be seen. With regard to the U.S., the largest influx aside from Maryland is Texas. And, we saw with the ice storms this year, 100 people lost their lives as a matter of energy insecurity. So, not to mention the fact that Texas as a state has one of the highest non-renewable energy mixes. So, our focus as an industry, I feel, needs to be proactive and to address these issues internally. And, that comes down to the mining pools and the equipment suppliers, et cetera. But, clearly governing where these machines have gone that have left China, which, represents 70% of the global hash rate is certainly going to be a challenge.
Right. We've got to wrap it up, but one last question, just because this came on the wires a couple recently, that a class action complaint was filed against CleanSpark alleging that the company had failed to disclose to investors that the company had overstated its customer and contract figures, that several of the company's recent acquisitions involved undisclosed related party transactions, and that as a result of CleanSpark's positive statements about the company's business operations and prospects were materially misleading or lacked reasonable basis. Are you able to comment on this?
Yeah, absolutely. So the source of that information is an anonymous website. We hired an investigative firm to get to the bottom of it. But what I can say is that since that report was published, CleanSpark has raised in excess of $200 million. And the banks that we've worked with have taken a really deep dive to analyze those statements and proven that, without exception, there's no merit to any of those claims. So the class action suit has in fact been filed. We're fairly confident that it's not going to go much farther than that point, but we stand by everything that we've done thus far, and CleanSpark has always we've made strives to be as transparent as we possibly can. With regard to insider transactions or lack of proper disclosure, that same report, I might add, commented back in December that our $19 million acquisition of the ATL data center was I believe they called it a shameless promotion that would result in no financial gain. And since that time, I think we've generated nearly $20 million in profitable revenue off that investment in just 6 short months. So we feel very confident about the company, about our path, about our full and complete disclosure, and we feel that this class action suit is just a matter of time before it's dismissed.
Great. Matthew, thanks for clarifying that, and appreciate you coming on the show this afternoon.
Absolutely. Thanks for having me, Christine.
Right, that was CleanSpark co-founder and executive chairman Matthew Schultz. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York, or rather on the show, for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.